Welcome to the Big Brain Podcast. I'm your co-host Larry Cermak, president of The Block, and I'm joined by Namik, CSO of MegaETH. Today we have a special guest. We have Vlad, the founder of Lighter. Welcome, Vlad.
Hey guys, good to be here.
Maybe first question would be to ask about your really diverse and interesting background. I don't think we've had some impressive guests, but your background is sort of maybe even more than some of the people that we had before. You competed in some math and physics Olympiads, then you went to Harvard, then you immediately co-founded a startup that then turned into Lighter. So can you walk us through kind of your early days and how that shaped what you're now building at Lighter?
I guess the way to describe it, like in one line, right? Like, I'm not a crypto guy who got into finance, but more like finance guy who took a detour into AI and then got into DeFi, but to unpack that a little bit. Yeah. So I did start out doing a lot of the competitive, math and physics and informatics. It was kind of quite different back then as well, right? Because like not a lot of people even knew what these things were. I met a lot of people through that ended up doing stuff in industry. While I was at Harvard, I started looking into trading and did some stuff with quant trading on my own, with two friends, and then got introduced to the team at Citadel, who at that time was just starting to build out high frequency trading. So I joined that team as an early member of, focusing on high frequency trading, actually, like FX and futures, which is kind of an interesting precursor to what we're doing now with Lighter. But so I worked in the area of high frequency trading for about 8 years, first at Citadel and then at another firm where I built out HFT trading desk. But I guess because I knew as I mentioned, a lot of the people from kind of the Olympiad circle, many of them ended up in Silicon Valley, and I in 2012 kind of shifted gears and joined them out there, and I actually kind of worked on a few different things in AI and fintech as an engineering leader, and then later as a founder. Now, actually, I first came across the Bitcoin paper back in 2012. I thought it was really cool, and I wasn't like, after leaving the hedge fund space, right? Like I couldn't trade any of the traditional assets for a couple of years. But certainly, like no firm's legal department would have known about Bitcoin at that point. So, I did try to build a bot to trade Bitcoin with a friend back in those early years, like 2013. I think people are looking at the markets now, right? Like back then, Bitcoin was trading at like $50 or something, right? And we tried to trade it, but it was like too small to be interesting. So kind of put that aside. But I kind of continued following the space. Learn more about Ethereum and zero knowledge proofs and all of that. And then in 2022, our team, not just me, but a bunch of people on our team, all kind of had a interest in various aspects of blockchain and crypto, and so we thought we should build something together. And yeah, that's kind of that got us to think about the ideas that ultimately ended up in Lighter.
They say money never sleeps, except when markets close at 4 p.m. and on weekends. That's opportunity lost to lend, to grow, to make moves. But now everything has changed. A first-of-its-kind trade. U.S. Treasuries financed with digital dollars. Immediate, after hours. Live on Canton, entirely on-chain, privately transacted. Liquidity unlocked, whatever the time of day or night. Instant financing, settled atomically. Turning 24/7 collateral mobility into a reality. Trusted by the world's leading institutions and the next generation of builders. Real assets, real utility.
So tell us about Lighter. What is it?
Yeah, so Lighter is a perp DEX on top of Ethereum. I think the most important things about it are low cost, low latency, secure, verifiable, and composable. And I think the first three are pretty self-explanatory, but like verifiable is really important, right? Like everything that happens, every single order, every single cancel, every single liquidation, all of that, there's a proof that it happened correctly. And we created, it's on top of Ethereum in the form of a custom L2 that kind of essentially proves that all these financial operations happen correctly using ZK circuits that we've built, right? So that's the verifiable part. And then the composable part is also really important, right? Because the goal isn't just to build something for to speculate on stuff in a walled garden. It's to kind of be connected with the larger DeFi ecosystem, most of which is also on top of Ethereum, right? Because ultimately, I think part of what got us excited about the space is kind of rebuilding, building a version of the financial system that's kind of verifiable and secure. And so being composable with other parts of that is also really important.
I think that the perp DEX landscape has been quite interesting.
Mhm.
And I think that, there's a couple of different people trying to do like an L2 architecture. There's Lighter, obviously. I know there's Bullet over in Solana. Hyperliquid has, an layer 1 architecture. They have consensus. Yeah, I guess like what led you to building what you think is like this ideal construction, right? Why did you choose to build a layer 2 on Ethereum that uses ZK proofs for verifiability, as opposed to going to build a layer 2 on maybe a faster chain, or build your own layer 1?
Yeah. Right. So I think building your own layer 1, can I mention the 5 goals, right? I think you can get to the verifiability part. You do it that way, but what you're going to have a tough time with is the security and the composability. If you're not on top of Ethereum, you kind of lose all the security aspects of it. And so, for example, if you're doing your own custom L1 and that, there's an outage or it's corrupted or, something like that happens, that's basically it, right? There is no way anyone can get, their funds are not secure in that case, right? Whereas for the way the architecture we picked works, even if our L2 runs into problems, now that's obviously not a good outcome, but it's not a catastrophic outcome, because you can still get your assets back from Ethereum, right? And also the composability part too, right? If you're building your own L1, then you're gonna have to do a lot of work to get other projects to build on that L1. And people always ask us who, how are we getting projects to build on top of Lighter? And it's we don't really need to do that, right? Because anyone who's building on Ethereum will be able to compose with Lighter once we have, there are a couple of things we need to have for that to happen, which are kind of Spot and ZKVM sidecar, which we can talk more about that later. But there's not going to be a need to rebuild the whole ecosystem of lending and stable coins and staking and prediction markets and all that. It'll all just work if it exists on Ethereum, right? So but I think you asked another question, which is different, which is why not an L2 on top of a faster L1? Right. I think you actually the L2. Vitalik has made this point before, right? Which is the more secure the L1, kind of the more efficient the L2 can be. And so from that perspective, now we even consider being an L3, right? Of on top of another Ethereum L2.
Mega Lighter when? No, I'm kidding.
but that's actually not necessary, right? And for our use case, right? Because the L2 can actually be as efficient as as hardware allows it to be, and then as long as everything it does is proven. The proof generation part doesn't have to be real time, right? As long as it should be fast, but the part that needs to be really fast is the actual execution of every order, and every cancel, and that's the part that's high frequency, right? The proof generation part needs to be fast enough for assets to kind of flow back and forth between the L1 and the L2, but people aren't. A trader isn't moving money back and forth and depositing and withdrawing every second, right? They are trading, or some traders might be trading every second, though.
Yeah, I think it's an interesting topic, right? And obviously, this is something that I also think a bit about. And it's ultimately like if you were to have a bunch of layer twos on a fast chain like Solana, you might have interoperability benefits, right? But I think for something like Lighter, the potential downside of not having the strongest liveness guarantees just makes it non-negotiable. So would you say that's an accurate way of describing your position?
I think that's right. I mean, I like, I don't know if I would go as far as like non-negotiable, but it's just a much more, like if Ethereum didn't exist, would we build on top of Solana? Like maybe, right? Like,
Yeah,
we wouldn't just give up, but like, given that Ethereum does exist and has this kind of, there's a reason why there's over 100 billion of kind of assets on top of Ethereum. I think the security of it has a lot to do with it. And also the fact that it's been around a long time, there are a lot of really smart people building on top of it.
Vlad, can you walk us through the decision to make Lighter a zero fee for normal users and then small fees for more advanced users where they have slightly lower latency, which sort of mirrors what Robinhood is doing as well, a similar model. So would you walk us through how you made the decision, and if you think what do you think it will accomplish?
Right. I think that there's a few things that went into that. I mean, one, just kind of going back to my background, I was actually went to high school with the founder of Robinhood back in Northern Virginia. We were the two Vlads at our high school, and so later on we reconnected. We also both worked in high frequency trading, and then both ended up in Silicon Valley, right? And so when, like, in the early days of Robinhood, I was one of the first advisors. The part I was advising on wasn't this part, right? But I got to see how they thought about the business model. And at the time, like, everyone thought that was crazy, right? Like, why would you, zero fees just seemed like a gimmick. Like, how does that even make sense? And it worked, right? I mean, and in fact, not only did it work for them, but like others in TradFi switched to that model too. And it kind of, it makes sense if you think about it in terms of like other industries, right? Like ads, where you want the consumer, the experience of the consumer to be as frictionless and as simple as possible, and then it's the other participants whose business it is to trade. Like the example I give, right? Like if there's a professional trading shop, they're trading on Lighter, they're making 100K a day, and now we introduce fees on them. Now they're making 80K. Like they'll take the 80, right? They're not just gonna leave. Whereas like a consumer, they have lots of options. Like they're kind of also, they're not going to trade on like 10 exchanges, whereas like professional trading firm could, right? So that's one way of looking at it. Another is just like our tech, because it is low cost. Like maybe other projects just wouldn't be able to support a zero fee model for retail. Because for us, actually, initially during the private beta, it was free for everybody, and then we introduced fees for HFTs and market makers. But like maybe a project with a different architecture wouldn't even be able to support that, or would kind of it wouldn't be sustainable. And I guess the third one, just philosophically, right? Like democratizing finance. I mean, that's ultimately like you're democratizing finance in many ways. Like anyone can have access to lots of different kinds of assets, but being able to do that in a way where like the little guy can do that for free is also part of that mission.
How do you prevent spam, or at least mitigate spam?
So there are rate limits and kind of like small speed bumps and things like that, right? And also, I mean, there are other things as well, like that are more advanced now. But just to use those as examples, right? Like if you're a retail trader, like you don't really care about like a 50 millisecond speed bump, right? Or you don't care about like not being able to send 1,000 orders a second. Like that's not what you're trying to do in the first place. And then so part of how the premium tiers work is that to have, and there's always some you can't send like 10 million orders a second or whatever, right? But like depending on which tier you're in, you get less of the speed bumps and less of the rate limits.
I remember I've been in crypto full time since 2017. I remember back then thinking like, holy shit, Coinbase cannot be charging these fees forever, right? Like eventually It's just going to go to zero fees or very close to zero fees. And somehow 8 years later, they're still charging pretty insane fees to retail, and no one has really changed it. I think like Binance, actually, the reason why they grew so much in 2017 was because they started charging slightly lower fees, but they still charge some fees. So do you think that eventually, just like in TradFi, this will change in crypto? And why hasn't it happened yet? Is it just because we have this like weird duopoly between Coinbase and Binance, and they don't have a need?
Right. Well, actually, like I think there are others who are starting to do it. I mean, like I think with Coinbase or with MetaMask, like there are some like pretty high fees, but I think those are not for professional traders though, right? Like even those products, there are like advanced versions of them for professional traders, which have much more reasonable fees. So now, why aren't those zero? Yeah, I do think it's kind of like in TradFi, it didn't happen for many decades until it did, right? So I think maybe you just need a catalyst. Like I think technology is a part of it because you need to be able to support those low fees on the back end, right? Or zero fees. If you're running a business where you're spending $1 to make 99 cents, like that's not going to be sustainable. And so you don't want to do it that way. But if you actually have the tech that can support it, I think it's a good model. I mean, like theoretically, right? It's like what this does is this opens up the product to more types of traders and more types of strategies. I think that the total amount of revenue that can be generated is actually higher with this model. It's like you want to be long-term greedy, not short-term greedy, right? Is another way of looking at it. But why hasn't it happened yet? It's a good question. It's probably has to do with just like legacy and like one thing that we've seen that may not be obvious is that like some participants, they have like models that where they kind of like the existing fee structure is kind of baked in, and they run these models and they don't really want to change them. We started out with zero fees, right? And then for everybody, retail and non-retail. And then we started out with having the LLP being the only market maker initially, right? It's kind of an internal market maker we run that anyone in the community can buy into, right? And so then that gives us, that gives the protocol a lot of leverage, because if, let's say, a market maker is like, well, we don't like this fee structure, we like the traditional one, and all of our models are tied to that. Well, that's fine. I mean, to quote another founder in the space, they can trade elsewhere, right? But like they can do that. But at the end of the day, like if they want to participate in the alpha that can be generated through Lighter, they have to adjust here. But my point is, like, I think part of why this hasn't happened before is this part, right? Because a lot of like the big market makers and trading shops, they're kind of, it's not that they're not just saying, well, there's money to be made, we'll go there, but they also look at it in terms of like kind of like the switching costs of like they have to like adjust their models and whatnot. It's not that they go from making money to not making money, but it's some work for them. And if they can avoid doing that work, they would. But once we got big enough, no one had that pushback anymore.
I want to go back to the Robinhood connection. So you mentioned that you and Vlad went to the same high school. I think he angel invested in your first startup. And then Robinhood invested in the last round that you guys did. And on top of that, you have Robinhood getting more and more active in crypto, now launching the Robinhood chain as well. Someone like myself who kind of like sees this would think, well, if they're friends and if they have a stake now, maybe there's more about it than just they actually supporting you financially. Maybe eventually you guys will also be on Robinhood chain, and maybe there'll be a tighter integration of maybe lighter markets eventually being available in the Robinhood app or something along those lines. I realize you probably can't share much, even if it's in the plans, but is it more than just financial support? Like, how tightly are you guys integrated right now in terms of strategic?
Right. Well, I will say that Robinhood has been they've kind of had their crypto part of their product for quite some time now. Right now, they've started to get into DeFi more with their wallet product. It's great. I think that they're building on top of Ethereum. They did that event in Cannes with I think Vitalik and one of the Arbitrum founders. So I think the technical choices they're making are ones that I'm certainly supportive of, and I think it'll give us an opportunity to do some of the interoperability with that chain. And we'll see. If it goes beyond that, I guess we'll see if there's anything. For example, like if they as they make more progress on tokenized stocks, does that open up opportunities for derivatives of those stocks, to be on Lighter, or or are there like opportunities for the interoperability. We'll see how all of that plays out, but we're certainly in touch with their team, and to the extent that there's kind of ideas to bounce around or ways to work together, we'll do that. But I think for the most part right now, our alignment, there's we really appreciate their investment, and I think philosophically, right, like the alignment of to the mission of like democratizing finance is there.
So you've recommended Robinhood to explore Ethereum. You've built what you think is an ideal construction, obviously, an Ethereum at layer 2. I'd love to hear your views on how to create a symbiotic relationship between a layer 1 and layer 2, right? A big topic for the past year and a half, 2 years, is that Ethereum messed up. Ethereum messed up by facilitating this layer 2 roadmap. All the value accrual goes to layer 2s. The layer 1, in actuality, needs to hyperscale, and all of these layer 2s are parasitic. So I'd love to hear your thoughts, right? It makes sense for you to be an Ethereum layer 2. Why does it make sense for Ethereum, or maybe it doesn't make sense?
I do think like there was like this question I think before in the industry of like, why are there so many L1s? Like are like obviously for some of them it's very clear what their value prop is, but like there's lots of other ones, and it's like, why are there so many L1s? I think you could ask the same question of like, why are there so many Ethereum L2s? Like there's I think for some, again, it's very clear why they're there, and others maybe less so. And it's like maybe there's some projects that like like got a lot of funding, and there's kind of those types of questions. But I think a lot of like what's happens on top of Ethereum is DeFi, but at least I think that's changing a bit now. But for like the first 2 years when we were building, it didn't seem like there like the Ethereum core wasn't really that actually focused on that, even though that's where most of the activity was. And and it's not like not just us, right, but even other DeFi projects. I think that's changing a bit now. But we kind of I think I mentioned this in one of the like posts I wrote, which is like the fact that we were able to build lighter without much interaction with the Ethereum core team. I think that's changed a bit in the last month or two, but like I think that's actually a good thing, right? Like it means that it is kind of truly decentralized, and you can kind of come in and build on top of it. So in terms of like the value accrual, I don't know, if you look at like the internet, right? Like there's kind of the layer, there's right like companies like Cisco, right, and or kind of building like the core infrastructure, and then there's like kind of the applications on top of it, like Google and Meta and all of that stuff, right? Like most of the value goes to the those applications, but like the infrastructure layer, the value of that is not zero by any means, right? I'm not saying Web3 will end up looking like Web2, right? But it's like, I'm just saying, even in that scenario, that doesn't mean that the value kind of at the security layer is low, right? But like to me, the way I think about where the at least like finance will end up is it'll be like 3 layers, right? The top layer will be kind of the front end, right? Whether it's a centralized or decentralized front end. Now we hope there'll be a lot of decentralized front ends, but nonetheless, it'll be like that front end layer. Then there will be the kind of financial plumbing, right, where all the actual trading happens, the risk management, the liquidity management. And again, we think a lot of that will happen on DeFi because of the composability and the verifiability, et cetera. And then there's like the bottom layer, which is a security layer. And so a question we get also is like, why are we focusing so much on that kind of verifiability and composability layer and not just on like having a great front end? And I think because DeFi is transparent, right? Like more value will accrue there. Like it's not like someone can just build a front end on top of this infrastructure and charge like 50 basis points. Back to the question of like really high fees, like because if someone did that, it'll be completely transparent, and then somebody else can come in and build something better. So like I think by the same logic, right? Like if you're how value is split between the financial plumbing layer and the security layer, we'll see how that plays out. Like a lot of people look at Ethereum as the ETH token, right? And
yeah,
I don't know. My guess is that, I mean, I guess you guys are going to talk to Vitalik soon. My guess is that his focus is more on like the value it provides and like the kind of the kind of like being the world's computer kind of aspect, right? And not so much of like the day-to-day fluctuation of the token.
Yeah, I think it's interesting because we're brainwashed into saying, the price of the asset is directly correlated with the asset's success. And then we have to figure out, like, hey, in a world where Ethereum is widely used by companies like Lighter, which themselves have millions of users, Ethereum is clearly a success. But how does that, go down to the ETH token? I have a bit of a simplistic, simpleton take, which is, I think if Lighter is able to beat other perp DEXs that do not have your construction, choosing to verify, choosing to settle onto Ethereum. If that architecture, the one you've built, is the winner, and is in part the winner because you chose to settle onto Ethereum as opposed to maybe a faster, more centralized layer one. I feel like when you game period out a couple years, you zoom out, it all basically goes as it's supposed to, right? Will Ethereum itself have the vast majority of the value compared to its applications? No one really knows. But I do think like the ability of the application to leverage Ethereum to become successful basically shows the market that this is actually the best settlement layer. And how valuable is that? I mean, we'll find out. But my assumption is it is valuable, even as ETH goes down 10% a day these days.
Right. And I guess it's certainly we hope to be a part of that story. But again, like Robinhood, Coinbase, like a lot, there are a lot of folks making the decision to build on top of Ethereum. I mean, that can't. I mean, yeah, like how positive is that for Ethereum? Yeah, like you said, we'll find out, but it's certainly not negative, right?
Since we're talking about value capture, we would be fools not to ask about the TGE, about the token, about how you're thinking about value capture of your own token. So my understanding right now is that you guys haven't really given you've given some guidance about, hey, it will probably be by end of year that there's going to be TGE. But also the market has been very shaky. We've seen Bitcoin go from 120 to now $80,000. First question is, does that change anything for you guys in terms of TGE? I know some teams are rethinking going to market in this environment. And two, how are you thinking about value capture for your own token, especially in the lens that we've talked about, which is low fees for market makers, no fees for traders? Like, how are you thinking about the token actually capturing value?
Right. Okay. Yeah, I guess I can answer parts of that. I think that just on the like the market timing question, there are actually, I think, reasonable arguments on both sides of that. Like launching a token kind of at the peak of the market is not ideal either. Like somebody who did a TG when Bitcoin was at 120, that may not have been the best from a market timing perspective. Obviously, if it's like at a, if you're at a point where asset values have actually come back down a bit and are getting ready to start appreciating again, that might be better timing, right? So I think they're kind of, if you're expecting further collapse, then it might not be. But I guess we can't really make decisions based on that. I mean, I think that's maybe like consideration to think about a bit at the margins, right? But like at the end of the day, we have to keep building and keep making decisions that kind of like create value for the ecosystem. And yeah, we've committed to kind of the year-end timeline, and we're kind of hard at work on that right now. But I could see a world where the market timing actually ends up being good, right? In the sense that maybe there'll be a bit of a shakeout now, and then like good will set us up for kind of a rally in 2026. We'll see, obviously, see what happens. Like again, we're not really in the market timing business. We're in the business of building and kind of creating value, but it could actually kind of work the other way too, right? So that's one thing. I think we'll have a lot. I guess between now and year end, we'll have a lot more to say about the specific tokenomics. So I just won't make any announcements on that right now. But I will say, like, the zero fees, again, we have turned on fees for HFTs and market makers, and they're actually probably higher than people would expect, or even that we expected them to be. Like, I think when we first turned them on, we were thinking it would be like maybe like 250, 300K a day, and it's actually like been like double that, if not higher. So seeing like kind of what I saw from like the Robinhood journey, it's not too surprising, but it's still nice to see this actually play itself out.
So I'm curious. Last bull market, the perp DEX that was kind of the champion was DYDX, right? Ethereum layer 2 has some ZK stuff going for it. I believe they used a Starknet stack back in the day. And they bear market hit. They moved to Cosmos. I think there was a volume reset. There was an activity reset, and we saw this period of experimenting with these RFQ dexes. I don't think any of them went anywhere in particular. And then obviously Hyperliquid emerged, right? And Hyperliquid was able to capture a lot of user activity during the bear market, was able to catapult that. And as market picked up, they were an amazing beneficiary of that across the board, right? A lot of the perp volume went to them. I'm curious to hear if you think that there is a reset effect, right? When we have these flushes, effectively like what we're going through now, do you feel like the companies that had used the bullet of a TG, the bullet of a points program, are they like poorly positioned? Are they disadvantaged for a new player to come in? Good product, but now they have a fresh token that they're able to attract users with, and then they're able to just win. What's your take on the role of bull markets and bear markets and the cyclicality of them for building product?
Again, I think the market timing part is interesting to think about. And like, I used to be a trader too, so it's like if I put on the trader hat, there's a lot to think through there. But when I put on the builder hat, it's like, we just have to build the best product we can. And given the the tech we've created and other tech that's available, and just kind of it's not like we would like delay. Like, there's never a case where we say, well, we would ship this feature, but like we're gonna wait 2 months because of like timing the market. So we're still gonna make the decisions we're gonna make. But I think if you're zoom out and try to and analyze the ecosystem as you have, well, DYDX, we actually, when we started building, right, that was the product we thought was the closest to what we would want to build. And obviously we saw a lot of gaps. I mentioned kind of the low cost, low latency, verifiability, security, and composability. Like, I think they were certainly like the first to do anything with verifiability on the perp DEX side. Like, they weren't proving the matching, but at least they proved like the settlement part, which we learned a lot from that. And yeah, like at the time they were the best product, right? Like it wasn't very low cost and it wasn't very low latency, but it was better than the competitors. And the volumes dropped, but I think the bigger story is like volumes of centralized exchanges versus decentralized, right? Because like in 2022 with the FTX collapse, we thought, okay, now people will get it and we'll move over to DeFi. Yeah. And that didn't happen. And it's like, what does that mean? Well, that means like for the broader market, like the product market fit of the decentralized products is like so bad that even though they didn't really fail, you'd rather trade on a centralized product where you have like a 1 in 6 chance, because I'm saying that because like one of the 6 major exchanges just completely failed. Like, you have like a 1 in 6 chance of like complete failure. You'd rather take that chance than like use a decentralized product. I think that changed a lot since then, right? Like, I think at this point, I would argue, just like, again, if stepping back from being a builder in the space and just like as a trader, like I think both Lighter and Hyperliquid are like better products to use than the centralized exchanges. Like, if I was just a simple trader, I would like look at it that way, right? I think there's like the bigger story to me is like the volumes moving from centralized to decentralized, and then what with bear market, like the thing is, like, even during the bear market, like 2023, like I think even then the centralized exchanges in total were still making like at least I think 10 billion plus in annualized revenue. even then. And so there's like a lot of market share to be had, and I could see a world where the market share of, in the bear market, right, like maybe there'll be like new folks coming in, and some of the, some of the participants from before being washed out. Like maybe there'll be a reset of DeFi relative to CeFi, right? I think it's a little bit harder to say, if there's like, within the decentralized world, like if there's some, like if someone launches a new product like next month versus somebody that launched 6 months ago, like that's a little bit, I think, harder to say. There might be some interesting dynamics there, but if I zoom out, I think the reset that hasn't really happened yet, but I think from a product perspective is ready to happen, is kind of the reset from CeFi to DeFi.
Amen.
Vlad, one more thing I wanted to ask before we end this is the market has been quite unpredictable over the last month. 1010 was probably one of the worst events that we've seen in the industry, something that was very difficult to foresee even for guys like you when you were building later. You guys had some issues on 1010. I think you went into a maintenance mode for quite some time. What have you learned from that? And is that something that, is avoidable in the future if we have another event, not the same as 1010, but maybe, slightly different? Is that something that you guys can eventually just be like fully confident, okay, we're always just going to stay online, like the downtime is going to be lower and lower? Like, what's your confidence level on this not being a problem in the future, and what have you learned from those events?
Yeah, so for us, the issues then were a bit more of more like blocking and tackling, in the sense that it actually, like during the crash itself, actually the system worked exactly as intended. And in fact, like I think our liquidation model for a lot of customers worked better than that of the competitors. I think there were actually a lot fewer ADLs, and liquidations were less in in total size, right? And so actually during that like 2 to 3 hour period of extreme volatility, the system A held up, and B, like I think worked well for the customers. Then kind of 5 hours later, we had an outage that was more just because the infrastructure kind of not the ZK proving part, right, but like the Web 2 part of the infrastructure that actually runs the API, runs the operation of the exchange before you prove that operation is correct. Like that part, and the database that sits there got into like a really degraded state, and had the outage as a result, which we compensated. Luckily, again, that happened later, and so people were affected by it, but the markets had already cooled down by then. So we were able to kind of compensate everyone affected by that. So I think lessons learned, right? I would say two lessons, right, which are very different from each other. One, just when it comes to the liquidation model, like ours worked well and it worked as intended, but I think we need to do a better job of explaining how all that stuff is designed and why. And like, for example, for someone who is a holder in the LLP, right? Like LLP, if you've held it all year, it's done fantastically well. And if you bought into LLP on October 9th, now at this point you've made, I think, like 2/3 of it back or something, but like still, that's not great. Now, if something like that happens once every 5 years, that's kind of a risk that you should be willing to take to get the yield you're gonna get. But again, from a communication perspective, right? Like, did every single person who bought into LLP on October 9th know that LLP has that risk? Like, probably not. I mean, it's in the docs somewhere, right? But it's like we need to make sure that kind of stuff is more transparent. I think everyone was certainly had clear docs about how stuff should work, but not very, like it needs to be brought more to the forefront. Similarly for the liquidations, right? Like, did everyone know exactly how the liquidations work? I think there's been more like education on that, not just for us, but I think for the whole industry. It is, because it's DeFi, right? It's much better though, because it's transparent. Like we can go back and say, okay, well, everything worked according to the rules, and here's like a proof of that, right? So that's one lesson learned. The second one is, like, there's a lot of work to do even if you get like the Web3 part right, there's a lot of work to do on like the Web2 part, just to make sure things scale. And for us, it was an interesting timing too, because we had just launched public mainnet 9 days before, like on October 1. And so we had like an influx of new users. So it wasn't even just like market volatility. I mean, that obviously played a big part in it, but like our like number of daily users like doubled or tripled like in just the week before. And you got this like volatility. Now, you know, like we should have upgraded the infrastructure sooner. And we were planning to, right? Like we actually had a planned upgrade going the morning of October 12th. That was when it was supposed to. So we were about 36 hours late on that. But basically now, since then, we've been spending a lot more time on just the like scaling of the infrastructure kind of all across the stack, not just the part that, you know, operates the L2 and communicates with the L1.
Vlad, thanks so much for joining. We enjoyed the conversation, shared a lot of good insights, and good luck on the TGE.
Absolutely. Thanks for having me, guys. Great questions.
Thanks.